Procurement and Finance Coffee Break. I'm Claire, your Finance Transformation expert.
And for the time being, I'm still Procurement Guru, but if this recording doesn't work, then not only will I be Tech Novice, but I'll be Procurement Initiate as well. But anyway, not a problem. Look, following upon it, great guest today, Paul Harrison. And again, like SRM was not Claire's bag a few weeks ago. Treasury is not necessarily my bag, but the good news is Paul's an expert in doing it. Exactly. Now you've worked PwC, you've worked Grant Thornton.
Colleague of mine said I've worked everywhere.
There we go. But you now work Dakota Advisory. Perhaps you know, bit of an introduction.
Very briefly, over the many years I've now been working. Started off in large PLCs, always doing corporate treasury. So BAT, Diageo, places like that. 20 years ago, started working for PwC. Worked for a smaller consultancy for a while. Worked for GT, and then nearly 4 years ago set up Dakota Advisory.
Right.
And what we do at Dakota Advisory is only corporate treasury advisory into corporates. So exactly what it sounds like on the tin. What we're all about is cash management, so working on your liquidity, working on your receipts and payments forecasting, getting your intercompany loan framework, working with tax people with that together. Think about foreign exchange. We help people, often private equity sponsors, with what we call debt by currency analysis. We've just done one. Foreign exchange models, hedging, debt compliance, even a little bit of debt raising, and then banking. And we do all of those areas, and then what we do is we help people with how you do that, so that all of the policy and governance and reporting and just knowledge transfer stuff. Very practical, actually.
Good, well, welcome.
Thank you.
Okay, so Paul, pleasure to have you here, and looking forward to the insights you can provide today. So let's dive right in. Paul, what are the primary objectives of establishing a treasury function within an organisation, specifically the corporate organisations you mentioned?
Well, when you're setting up a treasury function, which we do a lot, and just to say, when we're setting up a treasury function, often it's either in a carve-out situation, so you've got a company that's called a 100 million division, has been carved out of a huge, say, FTSE or S&D business. Or it's one that's grown rapidly, sometimes through organic growth, but also just acquisition. They've bought lots of bits, and in either sense, either they get to the size where they need a treasury, growing that way, or they're being ripped out and they need a treasury. The things that you need are the ability, in the first instance, to be able to manage your liquidity, to be able to think about where the money is, right place, right currency, right location, and so forth. You need to have your banking working, so you need to be able to pay your people. You need to pay your suppliers. Unsurprisingly, they get a little bit annoyed if they don't get paid. And also, just as crucially, you need to be able to get money from people. So that needs to work. Less immediate is foreign exchange risk, if you have some. And if you have debt, how are you going to comply, particularly in a private equity environment situation with a rather complicated thing to have. So it's getting all of those things in place, and then perhaps later on improving them, refining them.
And I guess you could have adequate lending, but we had a client that we were dealing with last year, and they had adequate lending, but what if you looked at across the group of companies, on some companies they had cash in hand and on deposit, and other companies they needed to borrow. So just by having that visibility of cash across the group, perhaps implementing cash pooling, you can reduce your external lending, which is of course reduce interest costs, which can almost pay for itself in setting up the treasury function, right?
Absolutely. So to address what you said with the cash pooling bit, by the way, that doesn't have to be automated. It can just be manual. It can just be, let's have processes in place to get to the money to the centre. The other point to say, it isn't just about banking. The intercompany loan framework's got to work. So it's no good moving the money around and then not having the processes in place as a mirror that makes sure it's done in a tax efficient way. But to your ultimate point, which was surely this is all about reducing your net interest cost or improving what you earn on your interest if you've got it, if you haven't got any debt. That was a hard sell a few years ago. When you had interest rates of 0.5%, zero, that kind of thing. We would talk to CFOs who say, well, you need to forecast better, work out what your hard deck of cash is, get it all to the centre, make that work, make this work. And your CFO would be saying, well, that's great, Paul, and that's great to coach advisory, but so what?
Right.
Because, and I'll get it to the centre, if I'm long cash, I'm going to earn 20 basis points. So what? More important in a PE environment because you've always got the margin anyway. But yeah, totally. And to your comment about it paying for itself many, many times over, typically.
Right, I've been lucky in my career.
Good.
And if you can tell, this is not necessarily my comfort zone. But look, some principles are common to all of our functions.
Yeah.
And I've been lucky enough twice to build a procurement function from scratch.
Yeah.
So what does it look like in the world of Treasury? How would what are those essential steps?
Well, I think picking up some of the things you just said already, it depends to a certain extent on what's there already. Right. So, we, for example, are working with a large listed company in Europe right now, and some of those elements are already there. But it's going back to what I was saying before. It's making sure you know how much money you have in the simplest form, so your liquidity management's working. It's making sure, though, that you can manage risk. So all of this is about interest cost, it's about risk, it's about liquidity. Those are the things that either kill you quickly or kill you slowly. And it's about, as my colleague Karen Pugsley, who's the other front-facing director at Dakota, would say, it's all about making sure you've got those processes that manage that well.
Right.
And a lot of people just don't. I mean, everybody thinks a policy's dull. It sounds dull, doesn't it? You don't really want to talk about policy at a dinner party. But if you have your policy in place, and that's been approved by the CFO, and therefore ultimately the board, it provides a whole guidance framework so everybody knows what good looks like. And everybody, as long as they're following those guidelines, is on the same page.
Excellent points.
I'm sure none of our listeners would find Treasury policy dull.
I find Treasury policy dull.
So in your experience, what are the common challenges that companies face when establishing a Treasury function, and how can they overcome them?
Well, some of the challenges aren't Treasury. So some of the challenges are the information. So we talked just before about cash flow forecasting. Now, we have a lot of processes in place that help people really get that working. And I don't mean an accounting forecast where the cash number sort of drops out of the back of movements in the balance sheet. What I'm talking about is, again, knowing where the money is. But depending on the business, a lot of this is then about information systems. So you and I have talked about this before, I think a little bit, where it's how those systems are automated, how that comes across, how the business understands what it's doing. So on one hand, you could have one where the size of any transaction is immaterial. So there are lots and lots of things going on, and you almost weigh the cash flow. Others, you have a business that's just a set of projects. And that's not very automatable, or at least not easily automatable, because all of the variability relates to things like milestones, things like that, which are, to a certain extent, qualitative. Did you do it? Is that bridge in place? Has that television program been completed? Rather than just what are the numbers? So a lot of it can be about that. And one of the areas we focus on a lot with people is foreign exchange. So we will help people really understand what their foreign exchange risk is. And that is not just about taking their numbers and putting into a prettier table. It's about really understanding the underlying risks that occur. So that can be everything from you are a business that does a lot of activity in Brazil. In Brazil, everything has to be real. But quite often they're buying materials or machinery, for example, from Japan, China, and the US, and those are in dollars or yen. And then they're exporting products that are related to the agricultural sector, coffee, soybeans. You have real in the middle, but it starts off as dollars and ends up as dollars. So what is the risk? You'll have other people that will have, you'll have businesses, I've mentioned bridges before. You can have a civil engineering business that does bids for 5 jobs a year, and they win typically 2 or 3 of them. Their costs are all in, and I'm talking from a real example here, Hamburg and the UK. So the costs are all in euros and dollars, but they're tending to build them in places like Angola and Mexico and places like that. So they're going to get dollars, but they've got costs here. And you can't say, well, we assume we're going to build 2.5 bridges because it sort of doesn't work like that from a hedging perspective. So you've got to think about optionality. So it all depends, but a lot. So really what I'm saying is some of the things that you have to consider, it's not just the stuff that we like talking about, which is cash and debt and foreign exchange risk and reporting and governance. It's actually what are the inputs into that. So that's where it comes to other people.
And you mentioned sort of data quality and change management there, which is a theme that we've talked a lot on, and I think it's an imperative to consider for any kind of finance or procurement or treasury transformation project, being it implementing ERP, setting up a treasury function, buying a new procurement software. So moving on then, as companies grow and expand globally, how can the Treasury function support and facilitate international operations, and what are the benefits? So you touched on it a little bit there.
Well, a number of areas. So I mean, often it depends on the way they're going to grow. So if they are growing into new locations and they're going to be on the ground there, they've got to be able to have the means of having their banking working. So who are they going to be banking with? How are they going to forecast cash? How's that going to be delivered, if it's being delivered back to the centre, or if it's going to be required going out there? What FX risk are they going to manage, and who's going to manage it? Because one of the things you want to do normally is typically you want to manage risk at the centre. You don't want to manage it in the different parts of the globe. You will often deal with companies where they've got a business in Thailand, a business in Canada, and a business in, it doesn't matter, Australia.
Right.
They've got all those issues, but in none of those cases is the finance function of a scale to manage them themselves. You want to manage that, you need to get that reporting into the centre. But you use the word facilitate, and that's one that we use a lot. A lot of this is all about enabling. The corporate treasury function really should be a means of enabling the underlying business to do what it does for a living. So what it's not trying to do is play the FX markets. What it's not trying to do is to earn a fortune on surplus cash. What it is trying to do is to ensure there is enough cash to operate. It is trying to neutralise the FX risk as much as possible, so that whatever, I'm not going to come up with a load of examples, but whatever you do for a living, you're doing it well.
Yeah, to support the core purpose of the business.
Rather than...
Okay.
I'm two topics that we've talked about a lot in past coffee breaks are particularly actually in relation to the broader benefits of procurement. We've talked about working capital management, but a second theme that's come up in pretty much all the discussions we've had has been around sustainability and ESG, right? Okay. And if I'm sat there as a new CPO or head of procurement, I don't have, because generally procurement doesn't have broad working experience in Treasury. We may well report to the CFO, which is a perfectly healthy thing, but we've touched on the point that my knowledge of Treasury pretty low actually. So in your experience, what could a procurement leader do to work better with Treasury on just in those two areas of working capital management and sustainability?
Sustainability less clear, working capital very clear. From a Treasury perspective, what we're really focused on is what's the cash effect and what's the cost. So if you are constantly buying things ahead of time because you're being given a notional discount, is that discount on an annualised basis? How does that equate to the cost of funds for the business? Do we have enough money to buy up front, or in fact, should we be paying later? Those sorts of areas. In terms of the sustainability area, I guess it really would just come down to I don't know.
Because one of the things, I've been working with a client recently where, in fact, we talked about this with one of our earlier guest, Janine Pickard-Green, which was around, why are people thinking about moving out to the cloud and bringing back to on-premises? And one of the things were, it was energy consumption. And of course, the processes that Treasury support essentially are server-based. It's movement of money between different bank servers.
Very much so.
And therefore, one of the things, as procurement taking an increasing focus on sustainability, with CFOs who are pretty much picking up the leadership on sustainability because of reporting requirements. It's just, I wonder how much that conversation between the way that you operate, the things that we're looking at, and the things that the CFO will actually begin to grow in importance. I don't suppose it's been a factor to date.
To be honest, Richard, it hasn't.
No.
It's certainly typically for us, it has to be the case, doesn't it? It's the same as, if you look at your processes, whether it's your own ones or those of your client, and you say to yourself, in 5 years' time, do we think this will be more automated than it is now? Good luck with making the argument that it won't be.
Yeah.
Now, that's very different from saying, what changes are we going to make? So, I mean, in terms of if sustainability means more nearshoring, that, of course, then reduces risk. And in a business that already has a lot of risk, that enables you to potentially take more risk with your financing and your FX. Because one of the things that we're very focused on is just risk reduction. So trying to say to a business, look, you're already quite highly levered, you're already quite operationally geared, you're operating in a sector that has quite a strong business cycle. How can you de-risk your business? And one of them is always foreign exchange, if that is an issue for them. So to the extent to which with sustainability, one of the areas if the discussion was between one area and another, and we're still trying to make a decision, if that, for example, reduces the amount of foreign exchange risk you've got, great, happy days.
It's funny how separate pillars start to lean into one another. For the most unexpected reasons.
Yeah.
Well, thank you.
Different perspective.
It is what it is.
Because I don't think about that, as you could see.
No, but there we go. That's the joy of having a coffee, right?
Well, exactly.
Yeah.
Exactly.
So thank you, Paul, for sharing your insights today, and it's your experience has shed light on a critical aspect of financial management.
Thank you.
Look, delighted, and I have no idea, as always, what we're going to be talking about next time, but we love having guests. And so, look, if you're out there and you're watching and you want to talk about what you do, you can rely on us to find a tenuous link to procurement and finance. There's always a way. Please get in touch. But for now, I hope you enjoyed it, and see you next time. Bye-bye.
Bye.
Bye-bye.